we're going to go to Tether. We're going to talk about stablecoins here, not algorithmic ones, but asset-backed stablecoins. Tether is expanding to its 11th chain, this time Polygon. So with Tether, right, you have these USDT tokens, stablecoins with assets sitting in a bank somewhere. Each token is meant to represent $1, and they've been pretty aggressive in expanding to multiple networks, right? Started on Ethereum, they're on 10 more now. The big ones as it relates to Tether usage are Ethereum and Tron. That's where you're seeing a ton of those Tether live and be traded. The charts on those two networks are the highest. The other ones are a bit of a little flat line, kind of down low. But Polygon, formerly known as the Matic network, has been gaining some momentum as a sort of faster, cheaper alternative to the Ethereum mainnet. And it's something that people are using with increasing regularity. So it's going to be interesting to see Tether continue its sort of multi-chain push. This is something that Circle is doing as well. They want to be native to all these different chains, right? They want a USDT on Tron. They want a USDC on I don't know what, like Solana. I think there's a Solana native USDC, right? So it's a multi-chain approach to get these asset-backed stablecoins into the ecosystem as widely as possible. So this is a new milestone, 11 chains. Everybody's trying to get there as quickly as possible, and this is the latest one that was announced. So I'm going to toss it to David for his thoughts on, I guess, the race for stablecoins to be everywhere. What do you think?
Yeah. So, I mean, I guess just a little bit of background for people to understand this. Having Tether native to each separate blockchain is important because it's essentially, I mean, in a certain sense, it's not really a cryptocurrency, right? Like, it is an indicator that you are owed $1 worth of value worth of Tether's assets. So that means it kind of doesn't matter what blockchain it lives on. Like, the technology backing it just doesn't matter. It was originally launched on Bitcoin, actually. And so that's all to say, like, they can do it wherever they want. And aside from regulation, it works on any chain as long as they just do the code. The only other thing I would say about Tether is just in the context of the UST thing, it obviously changes our perception of Tether, right? Like, I'm one of the people who, for many years, has been skeptical of Tether because they haven't always provided really convincing evidence of their backing, and sometimes they have seemed to do suspicious prints of the token. But during this, liquidation event, they performed very well. And we saw the clear difference between something that you can actually cash out and something that doesn't have any backing, but claims to be worth $1. So no parity, no exchangeability, no parity remains the truth. And Tether, as imperfect as it may be, actually does have some exchangeability. So it has come out, I think, quite far ahead, along with USDC, which has the same features, thanks to the UST collapse. I think that this has all been good news for Tether in a certain ironic way. But Jen, any thoughts about Polygon and Tether? Stablecoin proliferation.
Yeah, stablecoins are really just having their day in the sun lately. I feel like we're talking about stablecoins every day, and we're talking about use cases that are different than the ones we've traditionally talked about, which is mainly for people who are trading crypto. And so when I think about Tether, I think about all of the drama we've spoken about over the years about Tether. They've had so many legal issues with regulators, and they just keep trucking along. I mean, now they're on 11 chains. Yesterday, they announced that they are launching a stablecoin pegged to the Mexican peso to start to kind of address some of the remittance market in Latin America. And I think that's really interesting when we think about stablecoins as a solution for remittances. We've seen a lot of different cryptos try to tackle remittances in various different jurisdictions all around the world. And stablecoins is a real use case that's been spoken about at Davos, the World Economic Forum's annual meeting. They've been speaking about stablecoins for remittances. So I just think that, go stablecoins, and Tether has kind of weathered the storm, and they keep trucking along.
Yeah, there's 72 billion tethers out there in the world across all these chains. So it's becoming a bigger and bigger slice of the crypto pie. Really interesting to see, again, this sort of multi-chain approach. We've seen some flaws in sort of cross-chain dynamics. We all remember the wormhole hack and how much money was pilfered during that thing. So I think, rather than making cross-chain connections between all these different assets, there does seem to be growing momentum around sort of having native multi-chain approach, whether that's a stablecoin or whether that's, decentralized apps themselves who are building on these different networks. So it's interesting to see kind of this multi-chain push continue from where I sit. But hey, let's change gears. Let's talk about some other
Well,
stuff.
actually, can I just
Yeah.
make two last comments, or one
Yeah,
last comment
go
at
for it.
least? Which is the other interesting thing, is that you mentioned the total Tether amount is 72 billion, right? Well, the total paper value of the Luna UST system was 68 billion. And they're not really comparable because Tether is actually like harder money, and the UST paper value was levered way up. So, like, the actual amount of real money in Luna was different, but it's still really kind of reassuring that we could lose 68 billion in paper value, and the market has, obviously had some setbacks, but kept trucking along. And then when you look at Tether, I mean, I'm not saying a Tether collapse would be a great thing at all, but if the worst does happen, we have some kind of frame of reference for the impact that it might have on the market. And the other thing I was just going to say, Jen, is because you mentioned cross-border payments, and that just highlights that um, we do have to start looking closer at stability here, because people lost real money that was their savings in the Luna thing, and it is important that we make sure that doesn't happen with Tether, even however good we might feel about it right now.